Good morning, everybody. Good morning, good morning. All right, so I'm just gonna preface this stream. I had a really bad week last week. I tried some zero DTs on last Monday after the stream ended, and I kind of overcommitted to a really bad trading session because that was a trading session with a ton of chop after the move downward. Um, Pulled the account down quite a bit. So we're gonna have to work with that, and if anything, that makes the challenge a little more fun. Good morning, thank you, glad to be back. So on the SPY, and I'm gonna try to keep my zero DTs pretty low today. Today's stream won't be very long because I do have a doctor's appointment literally in 2 hours from now. So, um, we will only be streaming for, basically the 2 hours today. But the rest of the streams this week will be, longer. Now, for the SPY here, these are kind of targeting the last big sell-off we had. We can see how currently we're in the lower Bollinger. Now, obviously, with the pre-market and everything, we're doing pretty well. So we are having that bounce from the lower Bollinger. But we're still within this major selling channel. Hold on, let me edit this line style. But we're still within a major selling channel right now. So until we break this channel, we're still going to be treating this exactly like a major selling channel. So this buying, I do kind of expect it to pulse up to the top of this selling channel. I don't expect that today, but I do expect it to happen. We do have some bullish structure starting to form. Potentially we have a very nice inverse head and shoulders building. And on that inverse head and shoulders, we also have this cup starting to build up to the, what is it? The Sin 4005. So I'm going to mark a couple areas. Good morning, good morning. Thanks for joining. So for the next few weeks, I'm going to be trading very, very safely, just because we did kind of take a large chunk out of the portfolio. Now the primary portfolio, I'm still doing really well on. I didn't overcommit to those zero DTs on Monday with the primary portfolio, but with the challenge portfolio, we sort of nuked it a little bit. So we need to recover that, get back to 5,000, and then from there, we'll work on additional growth. So I'm going to delete this one. Now, with this cup getting ready to close here, very, very likely what we'll see is this pull up and then start pulling downward. Or we could just see it continue all the way upward on the 5-minute time frame. This is at 7:39:89, so let's adjust that. And this is at 7:50:18. No, I didn't get a chance to update the trades in the Google Sheet. I will do that when I get home from my appointment today. Small cup formed there with a handle. So very likely we're heading up to the 7:39:89. Now we will check all of our other signals as well. And hold on, let me see what's going on here. We can go ahead and delete that for now. Now for semis, you can tell how there is a very well crafted head and shoulders here. It's basically right up to the same area too. And this is starting to create what could be a inverse cup to the downside. So we do have to be cautious of that. So we'll mark some of these gaps out. And I'll take a look at chat in just 1 second. Market opens in 4 minutes, so we still have plenty of time. So semis pulled to the 604.39 in the pre-market, or in the overnight. One of the two. So potentially contending with that right now. And let's check QQQ really quick, just to see what other structure we got going. can go ahead and delete that. So we potentially have this cup building to the upside. But this is still looking pretty bad in terms of the structure. Now remember, it's still the end of the month. We still have, you know, today and tomorrow to deal with the end of the month, which means that they can be rebalancing still. Now, for the challenge portfolio, I'm only going to be taking 0 DTs if I see a really solid setup. If I don't see a solid setup, then I'm not going to be focusing on them, and I'll just be focusing on trying to, um, do some decent long dated setups and whatnot. So we do have a little bit of a divergence here between the SPY and semis. So semis are actually pulling downward while SPY is going upward, which is making me think that they might actually be trying to target another sell-off here. So we'll watch the HIG, the VVIX, and everything when the market opens, which is going to be any second now. My oil position's down a lot right now. So I want to see if semis build some support here. Because if we do, then today could be a really large buying day. Let's see, 644, 16. What am I looking at? 638.91, that's what it is. Okay, and let's check our volatility today. It opened right at this 90.70, so this has not moved much at all today. It is starting to pull down a little bit, so that's good. And let's check our HIG. The HIG did have a high of 90 or 79.95. It's currently at 79.92. Okay, so freaked me out a little bit, but the port did drop to like 2500 for a second, but now it's back up to 3000, so something shifted. But let's check the SPY here. Now I want to look at the 5-minute time frame. We have to be really careful because semis did pull down quite heavily, which is starting to form this inverse cup to the downside. SPY is just sitting at the 5 mile. And QQQ did have a really, really deep downside. But we do potentially have this cup and handle forming to the upside too. Volatility dropped to 90.31, so low of the day. Let's check QQQ. The HIG is still at 97.93. Seeing some selling in QQQ. Semis pulled up to 599.20 and looking to be selling downward again. Volatility still pulling down. Now, we were in the upper Bollinger, so today's already had some pretty crazy movement. But we did pull down all the way to the lower Bollinger, which created the conditions to pull to the upper Bollinger, which now create the conditions to pull back down. So from this upper Bollinger, I'm expecting a little deeper move than that. Seeing the ADL starting to pull down a little bit. And we actually see within the upper Bollinger here, we have, I wish the drawing wouldn't be locked to the candles. You can see how there's the second candle here isn't giving us a higher high. So we had the initial push, then it kind of weakens. So this is looking, fairly weak right now. But we do have our volatility pulling down very heavily. So volatility was all the way up at the 9084, says 9082, and it's currently at the 8939. So this is looking like it's going to sell. But at the same time, with volatility pulling down, this can give us that push to the 739. I'm not seeing a clear enough signal to take positions into this just yet, because with semiconductors, again, we did pull up to the 599, and we are currently at the 594. But we're also within the lower Bollinger here, which can create conditions for buying to the upside. But it's looking extremely likely that we're going to close this cup to the 589.74. Now the ADL on QQQ doesn't look too bad here, but we're seeing weakening in the buying candles. So there is a little bit of tapering here. Volatility is still pushing downward though. It's at 88.61. Excuse me. And the HIG is pulling back a little bit. So it did have a low of 79.91. It's currently at 79.92. So if this structure doesn't complete, then that's going to be, bullish, because that could potentially form cup and then handle to the upside. But if we do complete that structure to that 589.74, then this will be somewhat invalidated, as we will have bearish structure building. There's a couple other charts I want to look at really quick. So ACI, Albertsons, this is one that I've been taking a heavy position in. Currently I have the July 17, 15 strike calls. We did have some bearish structure building, but I am still expecting it to kind of head to the upside. Main reason why is that we were within the lower Bollinger, and that's kind of how I take my trades. It's a mean reversion, so what I'm expecting is to pull back upward towards that upper Bollinger. 15 strike would be slightly above the 20 MA, which isn't unreasonable at all. But these positions are up currently 95%, which is really nice. Another one I'm looking at is ACN, which I did start buying at that 118 range. I'm targeting the 150 strike calls, which would be, below this 20 MA range. So on the daily time frame, going from lower Bollinger to the 20 MA makes a lot of sense. And the reason why I bought it, not only because it pushed the lower Bollinger, but it did have a very, extremely large sell to the downside. It went all the way from basically this 198 down to the 118 within, 2 weeks. So I'm looking for some reprieve here, but these calls have been doing good. They do bounce a little bit. Now let's go back to semis. Semis hit the 20 MA. So from the lower Bollinger to the 20 MA. Now with this 20 MA, we have to be careful of a rejection to the downside. Or potentially that push back up to the upside. Now volatility is at 88.56. So still basically pushing the low of the day. And on SPY here, we're going to hit this 739.89 pretty much any second now. We did pull up to the 739.72. So it's extremely likely we hit that. And from hitting that, that will be closing a larger cup, which means that we should be starting to expect some bearish structure. Because from the top of the cup, usually when we target shorts, and semis have been still struggling to push here, which is kind of telling me that very likely we will see that cup top hit, and then be able to have a pretty quality short position the pull down in the handle would coincide with the closing of this inverse cup to the downside. So I do think I'll take a short position once we push up to the 739.89. Volatility is at 88.05. And the HIG is at 79.93, so all the signals to get that push are definitely there. So I'll be looking slightly higher than that to short, but if we do have a rejection basically right off that range, then you'll know that's going to be creating a handle to the downside. So we are targeting that. Oh, thank you. Semis are starting to reject this 20 mo. So they may not give us the full cup close here. Which again, if they don't, then I'm not going to be shorting this. Excuse me. Volatility is at 88.37, so remember it was at 88.05 or whatever it was. Now, I do want to look over some of my trades really quick. And not today, but tomorrow we will be setting up some new trades. If I see any really good opportunities anyway. We're getting close to our put entry. One thing that makes me kind of mad is that last week on Monday, there's this 120 strike mark call that I wanted to take, which at the time was only like 30 something dollars. I want to say it was like $36. It's now over $930. So I've been kind of kicking myself all week watching those because I fully intended to grab two of them. So again, once we hit this 739.89, I will be taking a short position. We currently have the HIG at 79.94, the VVIX at 88.42. Made a new watch list basically only with QQQ, Semi, SPY, Volatility, and HIG. So a lot easier to watch. Which puts am I gonna take? So for these I'll target the 737 puts. Now we did hit that 739.89. I guess I missed it. So if we're gonna have a continued rejection from here, which is looking likely due to semiconductors, and for these we will just be writing them down to the 737.57. If you have a runner, allow it to run. Now again, I'm going to be taking smaller trades here. So I'm going to be very happy with just taking this 737.53 range. Even though there is room, further down to the downside today. But with semis, we did close that inverse cup. Okay, so from that inverse cup closing, we should be expecting some upside, which means that I pretty much want to be out of my puts currently. Very happy with that trade. That was a very easy and profitable trade. It's like 140 something profit off of the two puts. So that was exactly what I'm looking for. Now with this cup closing, and once we start seeing semis bounce, okay, because kind of the same situation here that we highlighted on SPY, well, except obviously the inverse case here, is that again from the inverse cup closing, we now have the potential to take calls to the upside. Now, I'm not going to engage on calls just yet. I do think, again, there's plenty of downside. Semis are pushing pretty low here. So we could go all the way down to this 581. I don't think we will, but that potential is definitely in play. And we're seeing if I could talk, seeing the VVIX pulling back up to the 89.05. FedExQ should close this inverse cup to the 71188. Everybody should have absolutely killed it on those puts. Volatility still climbing. Now again, I'm not taking any positions right now. I had those original first puts, took profit on them. Yes, there's potentially a lot more profit to be had. I'm not going to be streaming very much this morning. Again, I'm only here another hour and a half tops. We are starting to see semis bounce a little bit. Might be a little too soon though. Volatility still pulling upward. The HIG dropped to 79.90. Yeah, I think it shows the structure a lot better. That might just be personal preference. But for me, it shows the structure a lot easier compared to standard candles. So it's looking like SPY's going to pull all the way down to that 735.30. But I do want to mark this trade as a solid trade. So that's the first trade of the day. Worked out really well. The puts should have done super good for everybody. Semis have not slowed on the selling just yet. Now we did hit another gap here. So I do want to go ahead and mark that out just in case. Now on semis, we do know for a fact that we're dealing with bearish structure. Okay. It's obviously very prevalent here. We did have the rejection of the 20 MA to the downside that we talked about. Now this inverse cut bottom could be at this, what is this range? The 744.77. Or they could be aiming to pull all the way down to the 781. So until we see a major bounce, until we start seeing volatility pulling back again, then we'll just be very, very patient before taking any calls to the upside. Because the thing we have to contend with on the SPY here is that potentially we are going to close this inverse cup. Okay, if we try to take calls prior to that, then, we're going to lose some premium. So I'm going to be very, very patient before engaging any calls. I just have this lingering suspicion that we will be pulling all the way down to the 581. Now on QQQ, we did close a smaller inverse cup here. So on a lot of these symbols, we're seeing this inverse cup closing, which means that we can potentially have some call upside. And I want to look at the hourly here. The hourly is actually looking pretty weak as well. Couldn't secure the upper Bollinger, which means that potentially we could be heading down to the 685, which again, I don't think that's going to occur today. But I think the potential is there, especially if we keep pushing. It's looking very, very likely that the SPY is going to close this inverse cup to the downside, which is bearish. But we do kind of expect some bearishness here. Again, we did hit the top of this cup, and we can pull down basically all the way to this 726.65 before things get super, super bearish. We still have bullish structure. We still have this cup closed. From this cup closing, we are looking for the handle. From that handle, very likely going to have a major bounce if we're going to actually see the market start buying. Starting to get very close to this range. Now, once we do push the 581, I will be trying to engage some calls on SPY, very likely. And I know some are thinking that I left money on the table, which is absolutely fine for me right now. Again, I did have a little bit of a blow up in the portfolio, in the challenge portfolio anyway. So I want to take some very safe trades right now. So I am looking for the push all the way down to the 581. If we don't get that range, then I won't be taking calls. There it is. So with that, there is room back up to the 737. But I do want to make sure we wait until semiconductors slow this selling, because this is the bottom of a even larger inverse cup here. So we want to wait for the selling to basically catch itself, and then we can engage some of the calls to the upside. Volatility is at 90.33. The HIG is still at 79.91. And we're just going to be very, very patient until we see actual signals that the selling is going to be basically stopping. Still not done with the selling yet. The HIG pulled up just a little bit, so it's at 79.92. Waiting for the volatility to pull down. It's currently at 90.35. $90.42, so it's still increasing slightly. So yeah, everybody should have killed it on those puts this morning. Whether you took profit at the range that I did or, held all the way down to the bottom. Still major selling here, so I want to see if there's an even larger inverse cup that we're missing here. They can be targeting that 574 So we'll mark that out. It's at 5. Let's do this 575.05. And this is the, you know, very, very obvious head and shoulders that we've been seeing on the hourly time frame. So it is starting to really take shape here. We should almost certainly hit that 575. Yep, there it is. Okay, 574. And I just want to make sure we're targeting the exact spot. It's 574.81. So we're still being patient, but I am going to be looking for calls if we get the signals and everything that we're expecting. Good morning, John. Let's see. Friday. No, I'm not seeing that candle, so maybe it's a glitch or something. Volatility is at 91.44. We did hit the 572.23 today. So this could potentially start being some buying. Volatility is dropping a little bit. It's at 91.20 instead of 91.33, whatever it was. We see QQQ in the red now. Which very likely they want this 705.57. Oh, we hit the 705.17. So far starting to bounce from that. But volatility picked upward pretty heavily. It's at 91.64. So until we start seeing some signals of actual buying, and we also have the HIG pulling down pretty massively too, so 79.87. So we're going to be very patient here. If there's room for calls, then we'll wait for, some actual signals to occur. So I want to see volatility pull down and the HIG buying upward before we try to target any upside calls here. We are starting to get some potential signals of the bounce, but it's still a little too soon. But semis are starting to buy up. Same with QQQ. Volatility is still extremely high, and our HIG is still pulled down quite a bit. So until we see those signals shift, then I don't want to target the upside. We are starting to see the HIG buy up. And volatility pulling down slightly. So I want to go ahead and engage these calls and just keep a very, very tight stop on them. So if we do continue selling downward, then I'll just take a very small loss. Again, these are the 737 calls. So we are looking for this push back up to the 20 mil on the 5-minute time frame. So I'm seeing volatility pull down slightly. But we want to see continued buying within semiconductors. It's basically the primary thing that's going to be driving the market right now is semis. So I'm looking towards the 736.66. Again, I do think there's a case where we can head all the way back up to the high of the day, but we do have some bearish structures formed on semiconductors and QQQ. So we just have to be a little cautious. And again, currently I'm going to be taking very, very safe trades. So even if I leave money on the table, that's fine with me. Unless I see a really, really high conviction setup, then I'll be, cutting out basically at that 20 mile. Because here's the thing with portfolio building is that currently right now I'm down a little bit. But if I could sit here and make 200 or 100 to 200 plus a day, then times that by 10 days, I'll be back in the green. Not every trade has to be some super, super huge win. If you do see the signals lining up though for a huge win, then it is important to try to hold for that. Again, if you have very high conviction in a trade, trying to hold the entire trade is going to be really, really important. Volatility has pulled down quite a bit. It's at 90.54. And the HIG is back up to 79.90. Well, or as I said, that changes to 79.89. Still seeing buying in semis. So as long as semis continue to buy, then we continue to hold these calls. But second we see semis start to sell off again, then we will be out. Went ahead and sold two of the calls there just because we are seeing semis sell a little bit. I still have one left, so if there is room, which it's finally looking like it's taking, then I will cut it at the 736.69. Well, sooner than that. The 736 probably 53. So we timed our call entry very good. Timed our put entry very well. Okay, and I'm gonna go ahead and take profit. Completely fine with leaving money on the table here. So between those two trades today, it was, well, let me get rid of this, I don't need that. I made about $300 profit. Which I'm very content with. Again, I'm trying to rebuild, so that's very acceptable for me. Alright, so everybody should have done super well on those puts, super well on the calls. Now I'm going to look through some symbols to find some other trades. It's also a good time to go over any questions if anybody has any questions about, um, certain symbols or anything else. Now for the 0DTs, I will be done for today with these two trades. Again, I'm not going to be streaming a whole lot longer right now. I do have a doctor's appointment to go to in an hour from now. what's my opinion on silver? So, with the whole conflict not being done yet, and this is kind of how you need to look at precious metals, is that with oil being elevated, and again, even though it's been pulling down, roughly that 40 something dollars from the top, this is still super elevated. Okay, this is what normality looks like on oil. Okay, so we have a long ways to go before we enter normal market conditions. Now, because of that, that means that this is going to be taking money from every other sector, just about. We see this out of crypto, which I really don't care about Bitcoin right now, but we see that out of crypto. There's actually a really nice head and shoulders built there. So I might start trying to short Bitcoin. Um, anyway, we see this out of Bitcoin where basically since the war started, right here, we had a little bit of buying, but it's been pushing new, yearly lows, right? And it's starting to build additional structure to continue doing so. We see this out of gold. Where ever since the war started, back right there, we pulled down from the high, ran back up to that 5400, and ever since then, it's just been a straight shot to the downside. Now, this isn't going to change until we see oil prices come down, okay? In fact, this is probably going to continue dropping. I'm not expecting it to go down to that 3,200, but we are building the inverse cup right here. Okay, and that inverse cup bottom is at the 3906. Okay, which is actually why I exited my GDXW shares this morning. I'll buy back into them each and every week just because the dividend is really good. But, um, we still have some downside to contend with here. This is going to be the exact same for silver. If I can find it. Exact same thing for silver right here. So even though, that's misleading, let me delete that. Even though we are at the lower Bollinger on the daily time frame, which we pulled away from that a little bit, this is still going to be dropping quite hard, okay? Very likely not going to be finding a buying entry until probably that 42 range. So precious metals, we still have some downside, unfortunately, which I'm not happy about. I've been wanting to go bullish on the precious metal market for quite a while, and that opportunity hasn't been present at all. You could see this with gold. Each of these were ranges I wanted to buy at. I bought at this range, started heading back up, and then it dropped back down, so had to reconsider the position. But we will be looking at this 3907. Now for NVIDIA, NVIDIA. Okay, I got a lot of stuff on here. So that head and shoulders definitely did play out. And this is something I've been talking about with NVIDIA for a few weeks now, is that when we were above this major consolidation range, and that's what this white range is, it's called a consolidation channel. A consolidation channel basically means that the market is going to be trading from the top or, to the bottom, to the top, rinse, repeat, rinse, repeat. It's consolidating. Okay. So very likely, now that we're back in this channel, it's extremely, extremely likely that we're going to start seeing this. Now, it might seem crazy to think that, okay, the bottom of this channel's at 168, but again, remember, look at some of our symbols here. Look what we have building on semiconductors. On the daily time frame, we literally have a massive head and shoulders building. In fact, I think today's price action actually broke this major buying channel. So this buying channel holds weight since the beginning of the ceasefire, essentially when it was announced. We start the top of this channel from the range that this was all created from, essentially. And this was all created from the war starting. Okay, and yes, there was other factors that drove some of this. Some of this was earnings and whatnot. But we see that with the war, we have that sell down, which created enough liquidity to create this. So that's how we got this buying channel. Now, with that said, today we broke that buying channel. Okay. With breaking that buying channel, that means that we now have to start targeting a selling channel. Now the selling channel in here is a little difficult to fully identify. It'd help if my computer would not glitch out on me. Yeah, absolutely, Jin. I have no issues with that. So for selling channels, it kind of works the opposite way of buying channels, but you're trying to target supports. Now, there's plenty of supports in here, but what I'm trying to target is kind of the support that created this structure. Okay, and I'm going to make this blue like I usually make my selling channels. So we see that we have this massive sell to the downside that creates a support. We do have a support in here where we were pushing up, 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 and then all of a sudden we pulled down. It's not a red candle, okay, because the day was bought back up again, but this is still a selling day, okay? So with that, we then target the top of our structure, which, is that all-time high at the 655.95. And now we have a real expectation of what could be happening with semis. Okay. We have this very large inverse cup forming, which I'm going to go ahead and turn off the Bollingers here just so that we can look at structure. And with that inverse cup forming, this gives us that ability to see that, okay, very, very likely what's going to happen is that we will pull down towards the bottom of that cup. Very likely going to be breaking this buying channel even further. And heading down. Now from heading down, from closing that cup, very likely pull to the top of this channel. which it'll look bullish, but for us, we will know that we're within a selling channel, and from within there, potentially could be selling down pretty massively. So we have to be very careful of this. Okay, we have to be very cautious of this. Today, we did have the buying channel break, which I'm really zooming in on it here. Doesn't look like it broke very much, but this is still a channel break. Okay, this is still a valid, concern. So with semis holding this structure, we look back at NVIDIA, and we see that we have a massive head and shoulders. I want to make this red because that's a bearish structure. We have a massive head and shoulders and a selling channel. It's a smaller selling channel, but you can see it formed. If we're just targeting that small channel there. And very likely that's going to take us right back into this consolidation channel, which, I mean, it already has. We're already in that channel. But this is going to coincide a lot with what we're expecting out of semiconductors too. Okay, because from this channel, you see this very large head and shoulders structure that I've drawn out. Very likely, this is going to cause a breakdown. Not expecting it to go all the way to that point. But it's something we have to potentially contend with here, is that we might have some massive sell-off that could pull us back to this range. So, not that I'm expecting it, but this is what we have mapped out so far. Now for the bullish upside, we'd have to see some major structural changes here. But so far, that's kind of what I'm expecting out of NVIDIA, out of semiconductors, everything else. I know not everybody got to watch my video last night, but this is what I was kind of alluding to, is that usually the summertime is pretty bullish, okay? But we're seeing a lot of signals that are potentially telling us that the market's going to become very bearish soon. The bottom of this selling channel hit almost perfectly. So it's all holding very strong. Yeah, you're very welcome. But a lot of this is due to the oil conflict. We did have some, really nice upside from that ceasefire and everything else, some of the really quality earnings, Micron, Marvel, so on and so forth. But the market's positioned in a pretty bearish manner. And on top of that, to take this a step further, this is going to blind you all for a second, so just a warning. I have so many drawings on TLT. I traded this for years and years and years, so a lot of this structure is just super old. We finally broke out of that selling channel. shifted a little bit with the dividends. But we did break out of the selling channel. Now I do want to delete pretty much everything on here, because this is a very interesting signal here. And we're going to go over it just 1 second. I just want to realign this selling channel. Even if it's broken, it's still something that's very valid and we want to make sure to look at. Now, this is TLT. Okay, so this is the 30-year bond, or the 20-year bond, excuse me. Now, TLT tells you a lot about what's going on in the world, because this is a safety instrument, okay? And what I mean by safety instrument is that TLT is based off of a instrument that is a guaranteed yield, okay? And some people might say, oh, well, a US Treasury isn't a guarantee, the Treasury can still go default. Well, if the United States defaults, then it's basically the end of the world. So Treasury bonds aren't ever going to be defaulted on, which means that any of the yield gained from a Treasury bond is guaranteed. Okay, that means it's 100%. If you put $1,000 in and you're going to get 3% back, you're going to get 3% back. Okay. I know the yields are a lot higher right now, but you understand my point. So, this is the weekly chart. So this is going to be a little misleading here. But we've been seeing since basically when we exited that bear market in 2023 that we've been kind of holding this consolidation. And I'm going to change that to white. I want to change this to the weekly one more second just because it's easier to drag this across. But within this consolidation channel, and when did the war start? Let's see. So in here, and I'll show the correlation of why I'm highlighting this. This was the Bank of Japan starting to unwind positions. Okay, we could see this through the USD JPY. Right in here. We see that the yen is pulling down massively during that point. Was all the way up at the 159, and this is how many yen you get per dollar, okay? But it was at the 159, dropped down to the 152, was building bearish structure to continue downward, and the Bank of Japan wants this down, okay? So that's very, very important to understand, is that the Bank of Japan wants the yen down. And why that correlates with treasuries is because they buy treasury bonds at the same time as they do with buying the yen. So looking at TLT, we see that, okay, the war started, they had to basically pause everything. Now, since last month, this has been buying back upward again. Now, is that the Bank of Japan buying it? Probably not. So, is that domestic investors buying that? Is that foreign investors buying that? Someone's buying treasury bonds, um, all the way from this 82 range up to the 87. That's a lot of treasury buying. Okay, this is telling us right here that somebody's seeking safety. Someone with a lot of money is seeking safety. So, not only that, we're seeing very quality bullish structure to tell us that additional safety is very likely coming too. So are we going to pull all the way to the top of this channel? Potentially. Well, what's that going to do to the rest of the market? If money is going into treasury bonds, then it's not going into equities. Okay. You don't see equities moving up with treasury bonds generally. Um, because usually when people are entering into treasury bonds again, they're expecting equities to drop. So we have to be very careful and cautious of what's going on with TLT because again, we do have a ton of other signals that are telling us that we could potentially be heading down, pretty massively. So all this kind of correlates. So the market's looking good. Hold on. Volatility is down at 90.17. HIG is back up to 79.93. So potentially we could see this cup closing here. And again, on the 30-minute slash hourly time frame, we do have this bearish structure or bullish structure. We did have this cup close from this morning, which is why I wanted those calls earlier, because I did see that playing out. So while I don't expect it today, we should be heading back up to the 750. Does anyone have any other symbols they want me to go over before I end my stream today? Have to get ready to go to the doctor pretty soon here. Oracle. The challenge is down a little bit. Um, Currently at 3.3. Okay, so let's go over Oracle first. I had a bad week last week, so I overtraded on Monday, and I was trading at a time when I shouldn't have been trading, um, and just overcommitting to things. So I made a lot of mistakes on Monday, which we are not going to do again. Oracle, Oracle. Hold on, sorry, my watch list has so many different symbols. Okay, Oracle. Starting to look pretty bad here. Let's hide the drawings. Let's show the Bollingers. I think it's super likely we're going to that 134 or below the 200-day moving average. Struggling to even push above the 5 MA. The ADL is pulling down very, very heavily. So this is showing that a lot of people are extracting money out of this. Now on the weekly time frame, we are back to the 200-day moving average. It's basically at that 143, so right at that range. It's very likely that within the weekly, we are trying to get below that range. But historically, there has been some, I'm going to just delete everything. There has been some major bounces from the 50-week moving average, okay, or from the 200-week moving average. So, you know, that's essentially a 4-year moving average. So, let's check. Same thing remains true for the 50-month average, is that generally when you hit that range, you usually have a fairly large bounce. But you could see within the monthly here, there's this very large head and shoulders building. So we could be trying to break some new ground here. I think all the conditions are definitely present to push into that 134. And then from that, that'd be the 117. And you basically do have a smaller inverse cup and handle going here. Inverse cup with the head and shoulders. So we should be heading down to that 134, and then if the selling is going to continue, the 119. Now remember, Oracle basically were denied their massive data center package. That's back in here. And because of that, they've been really struggling to recoup their share price. Doesn't mean they can't, but they have some work to do. I have an answer to that, BS Planes, just one second. So let's look at SanDisk. SanDisk. Old notes from months ago. Dealers don't want that liquidity right now. So, SanDisk is a tough one because it's holding a lot of that same structure that we see within overall semiconductors. For example, with semis, you see the very large buying channel. We see that almost exactly the same within SanDisk. Let's go ahead and just mark it out. So with SanDisk here, we have been sitting above the 20 MA for probably that same period that we've been talking about 2 months now. Okay. Now, usually I expect a push from the upper Bollinger to the lower Bollinger to the upper Bollinger basically within a 2-month cycle. Okay. So because we haven't been underneath this 20 MA in roughly 2 months, that's giving the conditions for, that potential selling. And especially with what we're seeing in overall semiconductors, this cup is actually broken down and invalidated. So there's a small cup here on the daily time frame. This is looking like it could create a handle. However, this turned into an inverse cup, which invalidated that bullish cup. Sorry if you can hear my daughter, she's not having a good morning. Which means that we now have a double top to contend with. Okay. This double top, very likely going to push us to the bottom of this channel. And once we get to the bottom of this channel, we will be looking for that break because going to the lower Bollinger here would be breaking this channel. And from that, we would then be starting to build bearish structure. Excuse me. We'd start building bearish structure. So we'd start looking for a head and shoulders, an inverse cup, something like that. Now, with us being towards the bottom of this channel, there is the potential of just bouncing and heading to the upside. We'll mark this in white so it's easier to see. But there is that potential where we can just bounce off the bottom of that channel and head to the upside. But we still haven't seen this lower Bollinger in quite a while. Again, the last time we were in the lower Bollinger was back in March. So does SanDisk have some room to pull down? Absolutely. Kind of the same thing with what we're seeing throughout the rest of semis right now. I would get out of those Oracle calls. Now, I'll check Carvana, but let me go over oil really quick. So let's start out with USO. So USO on the daily time frame. And yes, I'm shorting this. I want further downside. However, we do have to contend with the fact that we've been sitting in the lower Bollinger for quite a while. Okay. Now, I have talked about my style of trading, and it's called, mean reversion, which means that if we continue pushing off the path, which that's what going below the lower Bollinger does, it means that we can have some upside. I don't expect the upside just yet, but this is heavily alluding to it. Okay. Um, However, the long-term goal of USO will be to pull back into this yellow range. Okay, because this is the range of normality. This is what USO usually trades at. You know, we can extend this pretty much indefinitely, besides small conflicts. And usually you're going to be trading within that range, or very close to it. Small deviations outside of that range, but it's very close. Okay, so that's what we're looking for. We're looking for that pullback to normality, but we do have to contend with the fact that from the technical standpoint, this can pull up a little bit, but we're still sitting within very bearish structure overall. So I wouldn't be too worried about that. Um, Again, if anything, it's just a small bump in the road type ordeal. I do think that the price action is trying to pull down towards that normal range. And very likely we'll see this in WTI as well. Yeah, same thing within WTI, which we actually went long right in here. Um, we absolutely nailed the bottom of WTI before it headed up all the way to that $5 range. But what do we see within WTI right now? We see smaller head and shoulders, followed by larger head and shoulders, which is, heavily alluding to pulling back down to this range somewhere. Now, I can't say for certain that we're going to pull down all the way to the 132. Okay. WTI kind of trades all over the board. But I do think that we'll be pulling down probably to this 2 to 250-ish range. So, do we have some downside in WTI still? Absolutely. But we can also see that mean reversion kicking in, where once you push into the lower Bollinger, you start seeing some buying. So there's a little bit of reprieve in here that needs to happen. We need to see the lower Bollinger expand further downward, and then very likely we'll see WTI push back into the lower Bollinger, because that's how it likes to trade. Either it likes to be within the upper Bollinger or the lower Bollinger. It doesn't usually like to just sit in the middle. Usually it's trying to push to one or the other. So very likely, I don't even expect it to go back up to the 20 mo. If it does, that'll be a really good opportunity to take some dated shorts. But overall, I do kind of expect it to drop down and close this inverse cup fairly soon here. This inverse cup being at that 269-ish, give or take. So we have some downsides still to contend with. Okay. Now let me take a look at Carvana. Yeah, I'm very happy you exited those Oracle calls. Yes, the 20 mil on USO would be a really good time to enter a short position on USO. Carvana. Alright, Carvana. You got some nasty looking structure. Now, the thing that makes me mad about Carvana is that before it even had its split and everything, my friend and I were talking about buying this at $3 a share. And that's, it'd be like what, 30 cents a share now, 3 cents a share, whatever it is now. Um, so Carvana makes me mad. But besides that, I would be putting a lot of weight expecting this 55. Okay. Very, very, very likely that range is going to close because you have an inverse cup and handle form there. Now, from that inverse cup and handle, that kind of unlocks this 29. It's 29.65. So that's what I'd be looking for. Now, you are going to be seeing some bounces and everything during this period, but right now the structure is super bearish. We have the ADL pulling down very, very aggressively. We could see from when it hit this 97 range, it dropped like a rock and then slowly pulled up. It hasn't even pulled back towards the high of where it was, okay? And it's been dropping back down again. So very likely it should pull down to that 55. It's actually 54.46. And from that, building some structure to continue downward. So this isn't something I would try to go long in yet. Okay. The structure does not look good. Now, when we go to a weekly time frame, the structure looks super good. Okay. It looks super, super good because you have the cup, you have the bearish structure at the top of the cup. Now we need to see some of that downside. So I fully anticipate that downside, but very likely from that downside, you're going to get a massive buying opportunity. So please remind me about Carvana if it drops down to that point, because I would like to go long. Will AMD pull down below 400? So I'm gonna look at AMD and then I'm gonna answer that other question. Hold on, AMD, AMD. I'm mad about AMD too because I told everybody to buy this when it was like 120. Uh, so with AMD here, we do potentially have this cup and handle. Doesn't look very good because we're seeing this handle taper out. So rather than going down and pulling up, it's just kind of going sideways here, which we've seen handles do that before, but usually what that turns into is an inverse cup. Okay. So we still have some structure to build in here. And technically, this high right here does not beat this high, which means that this can turn into a very large head and shoulders. So assuming we get this cup closed, that would be perfect because then that would allow this right shoulder to form. And from that right shoulder forming, that would give you some downside. Now, some of the downside targets would be that 436.97, that 393. And remember, a lot of these symbols and I mean like the majority of semiconductors back in March were at, not their lows, but they were very low. Um, Basically, when this war kicked off, that caused massive, massive, massive buying into semiconductors. Okay. Now we were seeing this buying starting at the beginning of the year. Okay, this was something that I was talking about for quite a while, where we were seeing tech selling, we were seeing the SPY selling, but we were seeing semiconductors all buying upward. So just because these symbols have a ton of weight in them currently does not mean that they cannot pull back down. Okay. And I want to show a good example of that. And we'll go with the SPY here. This was, let's see. Yeah, we'll talk about the tariff disruption. People back in this range, thought the market was going to continue just running to all-time highs. Okay. Instead, the market pulled down, you know, over $125 basically. Um, People thought they would never see that 475 again. This wiped out basically over a year's worth. Yeah, over a year's worth of buying in the span of a few weeks. Okay. Now, granted, I know we're not going through the tariff disruptions, but life happens. We don't know what's going to happen tomorrow. We don't know what type of event's going to occur or not. This can absolutely happen with semiconductors as well. So all that weight that was pushed into semis can absolutely get drained. So don't think that you can't enter on a dip on some of these symbols that are pushed up massively. Um, they've all gained this weight in a very, very short amount of time. Like for example, SanDisk, you know, it was trading at excuse me, it was trading at like 500 something prior to this whole conflict starting. And then all of a sudden it jumps up to 2300. You don't think that people can't take that weight back out again? Absolutely. It just isn't as easy as when they put it in, but they can definitely take that weight out. So there will be a buying opportunity on a lot of these companies. You just have to be very patient. Um, yeah. On the daily time frame, Jin. So let me read this question. So my main issue is when to exit a position, honestly. There's always a time when my position is in profit, but I don't take it and I end up holding too long. Then other times when I do take a profit, if I held longer, it would have made way more. So this kind of goes back to you have to have conviction in your trades or not. Okay? And for example, when I took the call here today, I had conviction in the trade up to the 20 mile. Okay. I even added on to the position when it dropped down originally because I took my first position, I want to say at the 33 like 90-ish range and then it dropped down to like 33.50. Um, I added to my calls at that point. Now, I had conviction up to the 20 mile, but I didn't have conviction up to the upper Bollinger. So if I were to rate this trade, it probably would have been maybe like a 6 out of 10 setup. Okay. Well, for a 6 out of 10 setup, do you want to be holding those contracts for a long time? No. I want to wait for the setup where I see super good structure, where I see all the signals lining up. I'm seeing everything that I need to see, and I can basically rate that as like a 9 out of 10, a 10 out of 10 trade. And then I'd say, okay, yeah, sure. Hold for the glory, hold for the massive push. Um, that's going to take some time with just watching the symbols, how they trade, watching the signals that we watch, like the VVIX, the HIG. Hold on, let me say bye to my daughter really quick. Sorry about that. Um, but basically it goes back to, and I know this isn't something I've talked about on stream a lot, but I have talked about it in the classes, is that we need to be able to rate our setups, okay? We need to be able to kind of give ourselves a checklist, which I can actually show you the checklist really quick. Hold on. So this is kind of a trading journal that I have everybody kind of copy down. Um, you want to be able to fill this whole thing out basically within 30 seconds to a minute. Okay. You want to be able to have a good setup of why you're taking the trade, what your exit's looking like, and really mapping it out. Okay, because if your trades are mapped out, then you know kind of where the length of that trade's going to go. So for example here, and I don't want to delete my drawings, but we'll make that so that we could see it visibly. And we'll delete that. So it's like when we took our trade in the lower Bollinger here. For me, that was a very good setup. It may not have been a 10 out of 10 setup, but we started to see the signals that we wanted to see. And when we entered that position, we were already talking about what our exit's going to be. So think about this as if you were driving a car or something. This is just setting up a roadmap, okay? This is telling you that our destination is going to be at that 36 whatever range, right? And so with that, it makes it so that you don't have to trade into all this chop. You don't have to trade into all this really garbage chop, because this range was rejected. And with the rejection of that range, that should have been the most clear signal to say that, okay, this is going to be, basically the end of the trade. We might see some more upside, but we could also see some downside from this point too. So my conviction in that trade is not a 10 out of 10. It's a 6 out of 10. And that's why it was very easy for me to exit at that range. Um, but if we started to see all the other signals that we needed to see, if we started to see semis buying really hard, if we started to see the volatility pulling down really hard, if we start to see the HIG buying up massively, which it still isn't, um, then that would be the conviction to say, okay, This 20 mile exit isn't good. This upper Bollinger is the exit. And you just map it out. Having a map and having a plan is how you hold your confidence and how you kind of understand when to exit, when to not exit, things like that. So put in that little extra effort to kind of plan the trades out ahead of time. Before you even take the contract, you should kind of understand, well, where's my exit going to be? Not just, oh, I'm buying calls and hoping for the best. A lot of people trade like this, where you're just watching candles. Well, this doesn't tell you anything. This might tell you structure. This might tell you that there's potentially a cup and handle forming here, but this isn't telling you the story. This isn't telling you your exits or anything else. So, yeah. Sorry, I'd go on it a lot further, but I'm just looking at the time and I really, really, really gotta go, everybody. So, thank you so much for watching the stream. I'm sorry it was a shorter stream today. I will be streaming tomorrow and I will be streaming Wednesday. Jin, make sure you message me, because I'll be happy to go over some trade setups with you, when I'm back home and everything. But thank you everybody for, watching the stream today, and hopefully you were able to have some solid trades. Tomorrow we'll continue to, you know, claw back our challenge money and keep it up. So, um, I look forward to seeing you all tomorrow and have a great day, everybody. Don't overtrade. Today is not the day to overtrade.